Okay, and people are starting to join us, and I see computers whirling around trying to get the audio and video to get started up. So while you are getting ready, this is probably, if you've been here for all four of them, this is a familiar screen that you're seeing. It is the screen of the Export Series promotional flyer there. And this is the fourth of the four-part series, so this is the last one. But anyone who has signed up for any one of the series will get links, an email with 4 links to each one of these series, and we're going to put all 4 of these on YouTube so that people can also share them outside of this purview. We find that a lot of people like YouTube and get a lot of benefit from that. And my name, to introduce myself, is Peter Harriman. I work for the Maine Small Business Development Center, which provides a no-cost advising to businesses, whether you're starting a business or you're already an existing business. We help with just about anything, and we try to stay up to date and current. And of course, we work under the umbrella of the SBA. They are the best people in the world, and they're on here today. They're the ones that are running the show. We are just hosting their webinar for them, us and the Women's Business Center. And with this being a webinar, if you have questions, that's by all means great. But I would ask that if you have a question, you either raise your hand or you put it into the chat. And I'm sending a chat to everyone. So if you're new to the Zoom webinar, you should see a little blinking thing on your screen. And or, as I said, you can also raise your hand and we can call on you. And if you put your question into that chat, we will get back to it. You might be in the middle of answering another question, but we will get back to that. We had 3 other webinars, as I said. We had a panel of businesses that did exports. We had another panel of resources. Then we had business planning, how to incorporate the international aspect into your business plan. And today, we're going to have anything and everything about obtaining capital for your export business. So without further ado, I am going to hand it on over to Brad Curry.
Thank you, Peter. Thank you everyone for joining us today. And if you've been with us all week, we really appreciate you coming in and listening and paying attention and participating. We've had quite a bit of feedback and people asking questions, interacting all this week, and it's been great. Really appreciate it. That makes the programs go so much more and have so much more meaning and impact when everybody is able to provide that feedback and that input and have those questions. Today, I'm going to introduce Joe Raycraft. He is our Export Finance Manager for Region 1 from the SBA Office of International Trade. He has put together a team to help present today's obtaining capital for your export venture. Joe, go ahead, please.
Good morning, everyone. And Brad and Peter, thanks again for hosting this and putting it together. I did participate in the first 2 series, and I thought they were excellent. The discussion was really good. So hopefully we can continue that in today's discussion. Focusing on obtaining capital for your export business. Today, I am joined by 2 individuals from Camden National Bank, Barbara Rath and Donna Ehrler, and also by a representative from Exim Bank, Richard Foy. And we'll each introduce ourselves here in a few minutes. But today, we're really going to cover kind of a pretty broad range of topics in export finance. From payment risk and the different types of payment methods to export loan programs that are offered by the Exim Bank and SBA, export credit insurance. There'll be a couple of case studies, and we'll also get into, or Barbara will get into a little bit on FX and foreign exchange. So I'll kick it off, kind of tell you who I am, where I'm from, and what I do. Joe Raycraft, Office of International Trade with the SBA, Export Finance Manager for the New England region. I've been with the SBA about 2 years and come from a background in commercial lending. And I'm based out of the Hartford District Office of the SBA. And I really promote the 3 SBA export loan programs to mainly to the lending community throughout New England and also through various resource partners, many you've heard from this week, and also small businesses like a lot of our participants today. So with that, I'll kick it over to Barbara to introduce herself.
Great, thank you, Joe. I'm Barbara Raths from Camden National Bank, where I work as the Director of Treasury Management and Government Banking. I work with a team who works to help businesses set up accounts and payment structures to help make sure that you have the right amount of money in the right currency at the right place at the right time. And you're looking, I will work in conjunction with my colleague Donna Erler on commercial lenders, who's working in terms of looking at lending money to meet working capital needs. But at Camden National, we're a community bank, but we work with companies doing global business here in Maine and New Hampshire and even down in Massachusetts. So our customers have growing businesses, and we need to help support them do exactly what I said, make sure that they have the right amount of money in the right place, in the right currency at the right time. And I apologize for my voice. I'm a little sick today, working from my basement here at home. But with that, I'll turn it over to Donna.
Good morning, everyone. Don't worry about the voice, Barbara. I have the same thing because the pollen is horrific here. I'm Donna Erler. I am the Director of Commercial Banking in New Hampshire for Camden National Bank. So we cover all of New Hampshire and down into Massachusetts, but I also am the somehow elected person to deal with international banking products across our footprint, and we work very closely with Barbara in Treasury. I have been banking, and this is embarrassing to say, for 38 years. I have been a commercial lender and work very closely with Barbara and her team and our team here to meet the needs that Barbara was talking about. So we work with the SBA. I've been down to the Ex-Im Bank and been trained by them to provide, working capital for our customers, for our exporters, and look forward to answering any questions you might have.
Rich, you want to
Hey, good to me now. Yeah, sorry. My name is Richard Foy. I'm the regional director for Ex-Im Bank. I'm responsible for the Northeast region of the U.S., so New York up to Maine. Ex-Im Bank is the official export credit agency of the United States. We really try to focus on risk mitigation, mitigating the risk associated with exporting to give both exporters and lenders the confidence to kind of play in this market. We'll go through some of the programs that we offer in a bit more detail. And I always invite you to call me with any questions as well. I think my contact information will be at the end of the presentation. I always think that's the best slide because, again, I want you to call me, hear your story, and then I can plug you into the appropriate resource. So we'll continue on.
Barbara, are you able to
Sure.
the slide deck?
Yep, let me share my screen and we can get going here.
Yeah, and I would echo Rich's comments about, calling, Rich or myself or Barbara or Donna, just in terms of any export related questions, and whether or not it's directly related to what we do is okay. We can certainly refer you to the various resource partners that are out there, or perhaps we can solve your issue. All right, Barbara, I'll let you kick it off.
Great. So obtaining capital for your export business is the agenda we've put together today. We're going to talk first about credit and guarantees. How do I prevent the risk of non-payment? Can I draw upon my line of credit to fund my working capital for an international order? I produce services that I sell internationally. Can I finance this work before I get paid? I'm looking for funding to develop an export market. Can I get financing if I don't have orders yet? What questions will the bank have for me about financing my international business? And then we're going to talk a little bit about foreign currency. Can I control risk by requiring that I get paid in US dollars? Or maybe if I'm getting paid in foreign currency, is there something else I can do to help manage that risk? And then we're going to provide an appendix again with contacts and resources to a good takeaway at the end of the presentation for your specific follow-up questions. So let's begin with credit and guarantees. In terms of wondering in terms of our audience, have you ever used letters of credit, documentary collections, trade insurance, SBA, or EXIM guarantees, or received a STEP grant? So in this presentation, you're going to learn about all of these different things. In the chat, if anyone has some experience, just let us know in the chat if you've had experiences with any of these types of financing. So the first thing is, how do I prevent the risk of non-payment? So, you know, I've got an international order and I'm shipping goods, but I'm shipping them really far away. I don't really know, you know, personally who I'm doing business with. And, you know, in order to get the business, I have to offer terms. I have to offer payment maybe in 60 or 90 days. How do I know I'm going to get paid, and I'm really worried about the risk of non-payment given the physical distance? Donna, you want to talk a little bit about this for us?
So there are several ways of doing that. One being is to obtain a letter of credit, and those LCs take on various forms. The first one we're going to discuss is kind of the more general letter of credit. And this is recommended for use in higher risk. You know, maybe you're doing a large custom order for your buyer. You're not really well established with the buyer. It is issued by the importer's bank in favor of the exporter. Now, one of the nice things about this is the fact that if the importer is able to get their bank to issue a letter of credit, it does give you some basis for understanding that they are at least creditworthy and qualify for these letters of credit. They can be used for one-time transactions. They can be used if you have a series of orders, you know, that goes on. It allows you as the seller, as the exporter, to grant longer terms. Some of the disadvantages, and there are disadvantages to each one of these products, you know, it's very labor intensive. It is relatively expensive in terms of transaction costs for your importer. So your buyer may not be happy about doing these things because they are going to pay some fees. You know, and the other thing that you have to be very careful of is there can't be any discrepancy in the documents. That can cause a severe delay. You know, the one thing it doesn't do for you is it does not, you know, it doesn't work with quality. It doesn't mitigate the contract risks. There's always also, as Barbara mentioned, documentary collection. This is riskier for you as the exporter, but it is more convenient and perhaps more appealing to your buyer because it is less costly. The seller, you, the exporter, obtains a letter of credit from your bank. And this, from a bank's perspective, we underwrite that exactly as we would a loan request because it is a credit vehicle. You know, the payment is it's faster, it's less costly. The exporter that has more control over the goods that you are sending. And, you know, as I said, from the importer standpoint, it doesn't require them to have a cost. It doesn't require them to get a letter of credit from their bank. But despite the lower cost and the fact that it is more appealing for your buyer, you know, the exporter's bank is limited and they don't guarantee payment. The banks do not verify the accuracy of the documents. The banks are not as involved on your behalf for these. We often get requests for what is called a standby letter of credit. And these can be used both for international transactions and also for domestic transactions. An example of a domestic transaction is often used in, say, a construction project where the landscaping can't be done until, you know, the spring, and you've rolled into the fall. And so we provide that to assure the town that that will be done. These are fairly costly, and they are usually cash secured. It will require an asset to do that. Again, it's underwritten by the bank in the form of a same form as a loan. But it's a very common practice for us. The other thing, Barbara, if you'll change the slide, and one that we highly recommend as a bank to our customers, is trade insurance. That can come from government sources like the XM, or it can be private. The nice thing about obtaining trade insurance is that if you are a customer of the bank where your revolving line of credit is advanced on a formula basis, say 75% of qualified accounts receivable, traditionally, foreign receivables are backed out of that line of credit and are not able to be advanced upon. However, if you obtain trade insurance, they become qualified assets for that. And given the market right now, you know, with transportation issues, with difficulty in obtaining equipment and supplies, those being delayed, you know, being able to obtain the maximum working capital is very important. Anybody have any questions about that? Okay.
Donna, you can see in the chart that's listed on the slide that the gross income with credit insurance would be higher because you can turn more deals, right?
That's correct.
In terms of allows you to do more business because you're leveraging your working capital.
That's right. So there is the cost of obtaining, you know, and maintaining the insurance policy. And you should know that typically the insurance coverage is below 100% of that contract. But this is a great tool, and we have used it a number of times for our customers, and they've been very, very happy with that.
Hey, Donna, I'm curious, I got a quick question. Maybe Rich can comment on it, but just in terms of like, what's the timing to get an insurance policy in place, and like, I know estimated cost, just a range of costs, just to give listeners kind of an idea.
Rich is probably better on the cost, but my experience with my customers has been, this has been a very fast turn. We have a manufacturer down in Nashua, New Hampshire, who has recently taken advantage of this. And it took very little time for her to obtain credit insurance. And in fact, she's been so pleased with it that she's now doing a second program with it. Rich, can you speak to the cost?
Yeah, sure. At XM Bank, again, we're on the government side. There's a private market as well. They tend to want to take more of your portfolio. And as a result, oftentimes they'll have more competitive pricing. We kind of gap fill. So we're looking strategically to improve your business in areas where you need our help as the government. So in a timeline scenario, we're looking at about 10 days to put a policy together. Our multi-buyer policy with a global rate is usually about 55 basis points. So not terribly expensive. There's no deductible on our policy, and it does provide 95% coverage, which is fairly high. And the premium structure is pay as you go. So as you know, in contrast to the private sector, with XM Bank, you only incur the expense of insurance when you actually affect that order.
Yeah.
Great. Thanks for that. So now we talked about the risk of non-payment. The other thing that someone might be worried about is, you know, I'm worried about using all my cash to reduce the order, and my payment's going to be delayed due to international shipping, right? This is a common concern. You spend all your money getting things ready, you ship it off, and now you're waiting to be paid and you can't operate. So one of the questions that folks say, should I draw on my line of credit to fund my working capital for an international sale?
And the answer I typically give a customer is no, please do not do that. Again, now many banks will, they'll block out a portion of your revolver. However, by doing that, it really limits your access to that working capital. Both the SBA and XM Bank have great programs that the bank can work with to help our customers handle those exact questions. Rich, do you want to talk about the XM?
Yeah, well, and I appreciate you guys. First of all, Camden is a great support of the bank, and I appreciate the fact that you do emphasize credit insurance, because from a bank standpoint, oftentimes they only look at a working capital guarantee because that's protecting the bank. Okay, what a guarantee does is it gives, again, it mitigates the risk of non-payment. But the non-payment is you as the exporter defaulting on the working capital facility that's raised for you. It doesn't protect you. The export credit insurance protects you, and therefore gives you the ability, in case of default by your foreign buyer, gives you the ability to pay this back. So hopefully it never triggers this guarantee. Okay. But getting back to the guarantee, this is designed to provide access to working capital, which for export is often difficult to come by. Banks really don't like export. They don't like assets being overseas. There are a lot of things where they're much more comfortable, managing loans that are domestically focused. So with this guarantee, gives them the ability to make these higher risk loans. We provide a 90% guarantee to the bank, so they do retain 10% risk in here, which is good because it kind of keeps their pencil sharp, makes sure that they're underwriting the loans right, because they're still at risk, right? If it was 100% guarantee, maybe they'd act a little differently. Who knows? XM Bank, we don't have a minimum amount or a maximum amount. Now, that is true and it's untrue. While XM Bank doesn't have a minimum loan amount, this always comes to the lender making the decision which guarantee program fits them best. The two on your screen are what they generally use, XM Bank or SBA. For lower loan amounts, I'll say under $2 million, $3 million, they'll generally use SBA so long as it fits. Moving into the higher amounts, since SBA has a cap of $5 million, if you're looking at that $3, $4, $5 million range, they'll probably be putting you into an XM Bank loan guarantee. We have, our program allows you, the use of funds is to purchase or produce goods for export. So it can be used for your overhead, your as well as the production of goods if you're manufacturing yourself, or if you're buying U.S. goods and you're exporting it. It can't be used to buy machinery for making the widget that you're going to be exporting or things of that nature, the way I think the SBA program does. It can also be used to collateralize the standby letter of credit that Donna spoke about earlier. So as she said, typically it's full cash collateral. In the case of an XM guarantee, it is only 25% collateral requirement. So when you're talking about leveraging, this is something that's very important. This comes up a lot if you're, say you're exporting capital equipment that you're producing. Maybe you get an advance payment of that, okay? But in order to receive that advance payment, your foreign buyer requires a standby letter of credit for that amount. Well, you can't deploy the capital that you've received, right, if you're locking it up to secure a standby letter of credit. In this case, you lock up 25% of that, you use the other 75, and you're in a good position to fulfill that order. A restriction we have is that we can't support defense, military defense, goods, or obligors. So we had a situation where a manufacturer of uniforms was selling to the Turkish military. We couldn't support that, even though it wasn't like a munitions sale. We couldn't support it because it was being sold to the Turkish military. It's an example there. I'll turn it over to Joe, I think, right now, so that he can go over his program as well.
Yeah, and I'll be brief because these two programs are nearly identical with just a couple of small differences. You heard Rich, loan size with Exim Bank, there's really no maximum. So for larger deals, it makes sense to look to the Exim program. With SBA, the two main differences are, besides the loan amount, would be the defense and military exports are eligible for SBA support, and there's also no U.S. content requirements, which Exim Bank does have some requirements there. So on the military and defense, that also includes companies that may be involved in the foreign military sales programs, FMS, and these are programs where, again, the U.S. company is negotiating or has a contract. It's essentially with a part of the U.S. government on behalf of a foreign government or foreign defense. Those types of transactions are eligible as well. As Rich said, these are purely working capital. They're either asset-based structured or transaction-based. Asset-based meaning that typically the collateral for the underlying line of credit is the export receivables that the company has on its balance sheet. For a transaction-based, that's more for kind of purchase order financing, where the main collateral source for transaction-based is the contract, the assignment of the proceeds, the payment proceeds from the contract, and typically a control account is set up as well. But both of these programs are what I would refer to as monitored. So there's a monthly monitoring, either a borrowing-based certificate or some sort of project-related document to show the bank where you are in terms of the contract. We're going to go next to a couple of case studies, one with SBA and one with Exim Bank.
Joe, if I could just jump in along the collateral lines, it's important to recognize that even if a bank will give you a loan, an export-focused loan without the guarantee, there are other benefits, such as leveraging the collateral that's available. For example, inventory, work in progress, parts. Those are all under our programs. The bank can advance at a higher rate than their own standards allow them to. So with the same collateral base, you can actually get access to a larger facility in many cases when you're using these guarantee programs.
Yeah, I think, if you fall into this category where you think this might be a financing program you can work with, call Rich and I, and we'll kind of talk you through it, and we'll determine which program makes most sense for you. So I think with this case study, this is an existing SBA customer, and it's a good example of how the program can actually be used by kind of a larger middle market. You might think, well, geez, this is a $70 million company, and they're actually a client of the SBA. And that is the case. Just in terms of the size eligibility for the SBA, it's typically based on the company's industry code, the NAICS code, and it's either tied to number of employees or revenues. In this case, the company's industry code allows for up to 1,000 employees. That makes it eligible for the SBA financing. So in this case, we provided a company with a $5 million export working capital line of credit. It was to support a multi-year contract with a Middle Eastern government that was purchasing. They make tactical equipment that's used in the military and law enforcement. The company has about 300 employees, long-term relationship with its lender, and some of the credit considerations or concerns in this particular case was a large percentage of their sales were concentrated with 3 large customers. One of those being the Middle Eastern buyer, and then 2 US customers, one of which was the US government, US military. They also had some liquidity constraints because there was some extended payments by this large export customer in the Middle East. They were a company that would, or a government-owned entity that would, not always pay on time. And that caused some liquidity issues for this company. They always paid. They never had any losses with this customer, but it was just a difficult, a little bit difficult relationship from a financial and a liquidity perspective. They don't have export credit insurance. Again, they've got a long-term relationship. It's a quasi-government entity. The bank was comfortable based on the long-term relationship. So what occurred here is we were able to structure an asset-based export working capital line of credit. The collateral was the export receivables that the company has on its balance sheet. Not only does it sell to the Middle Eastern customer, but also to 28 other countries. So they've got significant export receivables on their balance sheet. And one of the things that this export line did was it works without kind of interfering with the company's existing domestic asset-based line. So they've got their domestic line that's managed. They've got liquidity for their domestic business, and now they have a separate line for their exports. So as I think Donna had mentioned before, do you want to use your existing line of credit for your export sales? And again, no, you don't want to do that because now you're diluting your liquidity for your domestic business. Should you get a large order and now your line of credit is tied up on the export side. So that's just, again, I think a pretty good example of how this program can be used. Again, this is for a larger company, but we've got plenty of companies we work with in the few $1 million in revenue, and our lines of credit under this program typically range from $500,000 up to $5 million.
Yeah, I almost wish that I did a smaller case study. So I apologize for that, because this is another fairly large company, but it should be recognized that we do support many really small businesses with the financing and export credit insurance program. In this case, we have Lund's Fisheries. They were a small fishing company and exporter. They ran into issues where there was overfishing from foreign entities on the U.S. coastline, and they fought this really hard. Back in 1976, they were big part of the Magnuson-Stevens Act, which prevented the foreign fishing of our waters. Now, this is after there was an appetite built up for U.S. seafood globally, and they positioned themselves after this act by increasing their shoreline facilities and to support this export and to really increase the U.S. fishery. So they used our export working capital program to start buying from local fisheries, those boats coming in, so that they could process. It became more of a processing facility and a marketing facility as well to those global markets. What's nice here is that while they directly used our export credit insurance program and our export working capital program, the fisheries that fed them were also eligible for our programs because they were an indirect exporter feeding these. So I want you to also think about that, is if you're selling to a processor that is exporting, you may benefit from these programs, working capital facilities, and so on. So In this case, they were able to mitigate the risk of non-payment through our export credit insurance program, expand into those markets confidently, build the brand, and continue by through that working capital facility to support the growth that was really coming in. And now they're $90 some million company with a global brand, and it was all. It was really through strategic thinking, but also really utilizing the programs that were available to them.
Those are some very interesting case studies. Thank you.
Yeah.
Really, I think I find it really helps to have examples of how these programs are used. Thanks for that. So changing it up a little bit. I produce services that I sell internationally, but I do not have working capital or inventory. How do I obtain cash to complete the work before I'm paid? So these are services, these aren't goods. Oh, it looks like Fred, do we see Fred has his hand up?
Yeah. Yes, hi, how you doing today?
Hey,
Good.
Fred.
Okay, so you guys seem like to be talking with companies that already been working with different companies and stuff like that. And I've spoken to one of the banks that's there, I would rather not mention, and they mentioned that I need 30% of money to get the money I want. For example, if I want $1 million, I've got to prove that I have purchase orders of $3 million. Plus, I'm supposed to have like $275,000. I'm disabled. I don't have $275,000. So where do I get that money? What kind of grant? And from the things that I'm listening and hearing is that all these businesses already working and have done very well. What about us that are just starting?
Well, I think, Fred, that leads right into what we're going to talk about next. We have a number of customers that want to become exporters, but they don't have, first of all, the contacts. They don't really know how to go about doing that. And then they're worried about how, just what you said, how do I get the cash to start the ball rolling? One of the reasons we work so closely with the SBA and with XM and with, the trade organizations is so that we can put our customers or prospects into contact with all of these and come at it with a team effort. I think one of the things that we're going to talk about next, Barb, if you'll put that slide up, is a really great program that the SBA has that we have used in conjunction with our customers. And that is called the SBA Export Express program. This can be structured as a line of credit. It can be structured as term debt. You can obtain loans up to, I believe it's $500,000, which makes it really ideal for businesses with smaller funding needs or businesses that are just starting out. It can be used for working capital. It can be used for export development. It can trade shows, cost of trade shows. It can be used to buy equipment, different fixed asset purchases, acquisitions, and also can be used with standby letters of credit. The loans are made and serviced by an SBA lender bank. There are no fees, SBA programs, XM programs, there are fees associated with these things, but there are no fees on loans that are less than $350,000 right now through the end of September of this year. If I'm not mistaken, I know in New Hampshire, this type of loan can also be used for trade insurance premiums. Joe, is that correct?
You could, and also the STEP grant program can be used for that. And we'll talk, that's going to be a later slide.
Yep.
We can talk further on that.
Okay. So this is a nice program for people that are just starting out, that want to establish export connections, those types of things.
And I would add to that, Donna, too, that, as the question was about service companies, service companies, they don't have a lot of fixed assets for collateral that a bank can get their arms around. So that's one of the main reasons why a lender would want to have an SBA guarantee in this situation. And again, even if you don't have an export order in hand, but you're working towards that and you think it's going to happen, I always tell customers, start early, start talking to your bank, let them know what you're doing, what you want to accomplish with the financing, why you need it, and try to get it in place before you actually need it. And then when the order comes in, you're ready to go. Again, just from a use perspective, it really can be used for any legitimate business purpose, whether it's a short-term line or a term loan.
And if I could just jump in on Fred, and Fred, I don't know what your business is, and I'd be happy to speak with you offline. But so I speak with exporters or prospective exporters all the time that have like maybe half of the equation, and they're trying to figure out, they're missing money, and you don't always have to use your own money. I mean, I think partnerships are undervalued. You can take what you bring to the table and seek to partner with someone who maybe as an export agent or a sales rep, and start building your experience and so on in that area, so that a year from now you're better positioned to kind of go out on your own. It's some excellent resources that you'll probably want to look at, or the SBDC offices, as well as SCORE. I think you'll get a lot of benefit from speaking with them. But of course, you'll have my contact information after this. You can give me a call, and we can discuss it as well.
Yeah, part of being a banker is also to help not only our customers, but our prospects or people that are just looking for some guidance in making those connections. We're happy to do that as well. You don't have to come to us for a loan request. You can just come to us for guidance, and we can help, as Rich said, we can help steer you in directions to make those contacts. We're happy to do so.
So do we want to move? Let's move to our case study on Export Express. But then I see that Tom Fox has a question in the chat. So let's talk about this, and then let's the case study, and then go to Tom Fox in the chat.
Perfect. So this is a good example of how an Export Express loan was used. Again, this is for a small business. This is a company that's got just over $1 million in revenue, and it's totally a service provider. So again, not a lot of assets from a collateral perspective. Family-owned business. They produce video content mainly for large European media companies, and a significant portion of their revenues are export related. The company was looking for some short-term working capital, short-term line of credit, to help support some new contracts that they've received from European customers. And then they also needed about $75,000 in a term loan. And that was used for some equipment purchases. I think they needed some video and camera type things. And then also they were refinancing some prior debt. The owner had basically, put some money into the company for business purposes and was refinanced. So in this case, again, a smaller company, limited collateral, the liquidity wasn't overly strong, but the outcome was, the bank was able to, and this is actually Camden National did this transaction. They were able to do a $100,000 working capital line and separate a $75,000 term loan for this company. So it's a good example of how, you don't just get one, you don't have to just get one of these loans. You can get 1, 2, or 3 for multiple purposes. So They also had the ability to use the working capital line of credit for the issuance of standby letters of credit. So they would negotiate advance payments with these large European companies. And at some point, they expected that the overseas buyer would require, an advance payment guarantee, which is typically, documented using a standby letter of credit in this country. So the line was available to do that. So this was just, again, I think a good example of how it kind of ties this program together. And we'll talk again a little bit more about the STEP program later on, but this company also benefited from a STEP grant that they used to participate in an international trade show. So it helped to offset some of those costs. And I think, some of these customers, they actually met at the trade show. So really a win-win all around.
Great, thanks, Joe. I want to go to Tom Fox has a question. I see in the chat, he has a question about exporting from our US company to a Canadian company for Canadian sales. He says, we are in the forestry equipment sales and just formed a Canadian company this year and purchased property in New Brunswick. Perhaps who has controls that can unmute Tom Fox to hear his question.
Hey guys, I have a quick question. We have forest management services, and in the last 5 years we started importing portable sawmills and portable firewood processors. Most of our equipment is coming in from Scandinavia, and we're selling throughout the United States. And our sales have been really, really strong, and our services too. And we use the equipment in our services, and then we've kind of branched off and have a sales part of our corporation is dealing exclusively with sales. This year we have purchased 11-acre property. It's all forest land in New Brunswick, and we have contracts where we can sell the equipment in Canada. However, we don't have the Canadian capital because I'm a US citizen, and we don't live in Canada or have no connections to Canada, but we have a lot of customers in Canada. I don't have any working capital in Canada, so I want to see what we can do with our US company, and then export to our Canadian company, and then handle the sales from there, so I can kind of start to get a revenue stream in Canada, leveraging what we're already doing in the US. Right now, we're about a $2.5 million company. I have been working with Camden National here in Ellsworth, Maine. I've had some great advice from Camden National. I've been also working with the SBA. I have a SCORE mentor, and she's been really, really great for, kind of steering me through some things. And this is one of them. So I was just kind of curious, what kinds of relationships with US and Canada, and how could I take the business that I have now that has a lot of available credit, and I need to kind of develop a relationship with our Canadian company. I have not actually done any transactions yet, but I would be looking at exporting from a company that we own here to a company that we own there, and I was just wondering if anybody had some thoughts or advice.
Yeah, definitely. So I think what you're looking at is, kind of an export line of credit that you could use to purchase that equipment wherever you said Scandinavia or wherever you're buying the equipment from. And then you've got that's the liquidity to buy that inventory that then you can sell to your Canadian customers. Yeah. So I think, working with your lender at Camden National, maybe, get Donna involved. I think they can help you put something together that would help you achieve that goal.
Okay. Is there any support on the administrative channels that you guys might recommend? Let's say, for example, we have a firewood processor sold in Canada, and and it's in the United States, because I don't have the capital, the Canadian capital, to import to like buy these machines and have them delivered to Canada. They're coming through our US company, which then I export to Canada. But who would I talk to as far as getting the, we have a shipping and receiving coordinator. She hasn't really fully understood this yet. What does the paperwork look like? Who are the contact point people that I need to talk to actually kind of export this on paper before it gets delivered to the customer, you know?
Yep. I think probably the Maine International Trade folks
Gotcha.
would be good. And I do have a contact at the end of the slide deck for someone there. And she also manages the STEP program.
Okay.
It's actually Adrian Horn now at Maine International Trade Show. And yeah, and Tom, I'm on the board of the Maine International Trade Center. I can help connect you with them. But my sentiment's exactly, I was just like Maine International Trade Center, and they have someone who specializes in Canada, which will be perfect for you. Right.
Nice.
Yeah.
I just have one more question.
Sure.
I missed some of these presentations this week. Is there a way to get these? Do you have these recorded, and or are these live only? And if you do have them recorded, is there a way to get access to listen to some things that I may have missed on the earlier days?
Yep, they're being recorded at the end of the series, which is this is the last day, so probably tomorrow. You'll get an email with links to each one of the series, and they are also being put on YouTube.
Oh, sweet.
Yep.
Okay.
Everyone loves YouTube.
Yeah, that's brilliant. Thank you guys so much for the help, and I think this is I'm grateful for being on the call today.
Thanks, Tom.
Thank you.
Best of luck, Tom.
All right, let's get us going here. I'm looking for funding to develop and expand an export market. So more generally, I need help. Are there loans available for that? I don't have a specific deal yet. Oh, stop voting. Oh, here we go. There we go.
You're doing fine, Barb.
There we go.
So there are a couple of things for that. You know, the SBA has what they call ITL, which is an international trade loans. And I'll let Joe talk about that. And then we can talk about what you've heard us keep referring to, the STEP grant, which is really a wonderful program. Joe, do you want to talk about ITL first and then?
Sure. So the international trade loan from the SBA, this kind of gets back to one of the prior questions about you know, not having exported yet, but still requiring some funding. And these are specifically term loans, so not for inventory purposes or, you know, working capital. It's mainly for the purchase of fixed assets. A very common use of this program is for the purchase of machinery and equipment that will help the company increase its capacity so that it can, you know, address the increase in sales that they're seeing from the export markets. And that, you know, purchase also you have to show that it improves the firm's competitive position. So those are the two eligibility requirements, that it leads to increased exports or new export markets, and it improves the firm's competitive position. Again, it's for fixed assets. We can include permanent working capital. So when you buy a piece of equipment, sometimes it's nice to have a little bit extra liquidity that you can buy additional inventory for that new machine. It can also be used for real estate purchases or refinancing and even business acquisitions. It does require an export business plan. And as you've heard this week, you've got a lot of resources to assist with that, SCORE and SBDC. And in the next slide, I will give just some basics on what's required in that export business plan, just to show you how simple a document it can be. And then
really, do you want to skip to the STEP program and then go back to that, Joe?
Yeah, we can do the STEP.
Okay. Whether it's Maine International Trade Center or the New Hampshire International Trade Center, these are the places to talk to about STEP grants, State Trade Expansion Program. This is where, where you can get funding up to $20,000, I believe, that will help you, whether you're trying to produce collateral, brochures, or do a trade show, help with the premium of trade insurance. This is a great program, and I encourage people to really take advantage of this. Funded annually, Joe, I believe?
Yep, it's funded annually. It's partially funded from the SBA, and then the state's international trade centers also fund a piece.
Yeah, I have a number of customers that have used this, and they're not necessarily exporting yet, but they're preparing to do that, and it's been really helpful to them.
Yeah, and this is, as Donna said, I always call it, it's kind of one of those additional tools in a commercial lender's tool belt. Just be able to talk to their customers about, to take advantage of. I mean, it is, yeah, it's free money, it's grant money, but it is reimbursable. And there's a matching side to it. I think it's, maybe 25% match on the exporter side, and then 75% from the Maine International Trade. We can go to, Barbara, I think if you go 2 slides, you'll get to the STEP grant, and that at least shows some of the eligible expenses, and then we can go back to the business plan.
Yep, here we are.
So, you can see participation in international trade shows, that's been the #1 use of the program, but there's lots of other things in here, for design and digital marketing media, translations might be for your website translation or for marketing materials, website optimization and localization. I mean, those are costly things, and you can get some funding for those. Compliance testing for products, certification, labeling, translations of instruction manuals. I mean, the list goes on. So I always tell companies, if you have any costs that are export related that you think might qualify, I would reach out to the Maine International Trade Center and just run it by them. And, there's usually some flexibility there, and just, make your case.
Great, thanks, Joe. Hey, Joe, I'm seeing a question in the chat. I know we wanted to go back to business plan that's required for ITL. Roland is asking, for the SBA ITL program, is the redesign cost of a product for export permitted in this program? Is collateral required?
Yes, to both of those questions. So we do, that is a common use where a company may need to retool because they're making their product for the European market, and it's got a little bit different specifications. So that is a perfect example of how international trade loan can be used. And then on the collateral side, yes, the SBA does require a first lien position in whatever assets are being financed. So it's a piece of equipment, we're going to want a first lien on that.
Great. Roland, any follow-up questions? He's all good, according to the chat.
All right, I saw another one pop up.
Oh, there's another one. Oh, I hear Alberto is asking, sometimes excluded due to political purpose, are goods from Puerto Rico protected by the invoice insurance program for US made goods? Are there different guidelines in SBA or XM to handle business that comes from Puerto Rico?
Oh, good question.
Rich, do you want to cover that for credit insurance?
Yeah, I'm just rereading it so I
Okay.
understand it exactly. I mean, I don't know. I'd have to look into that. I've not had an issue supporting Puerto Rican goods. Why don't, Alberto, why don't you give me a call after, and I'll look into this.
Joe, anything? Oh, so from credit insurance perspective. Okay.
No, I would just say again, probably good to speak to Rich. I do have a colleague that does cover the Puerto Rican market. So I can provide you with their contact information too. They may be able to shed some light on that.
Okay. So folks, we're getting close to time. I just wanted to ask the question in terms of how do I prepare for a discussion with the bank about financing international receivables? Donna?
Rich said that banks don't necessarily like international receivables. I'm going to say that it's not that we don't like them, it's the fact that we have to have more information. Because the job, we want to help our customers, but we do have to do what we can to mitigate the risk to the bank, because it is risky to do international financing. So it may be frustrating, but if you have a good business plan, it will help a great deal. I will tell you that. But if not, we're just going to ask you a lot of questions. I mean, we want to know how much of your business comes from exporting. Are you looking, to finance the cost of labor or the raw materials, the supplies? What is the importer asking you to do? Are they requiring a letter of credit? Those types of things. Are you looking to finance one large order, or is this going to be an ongoing relationship that's going to have a number of transactions over a long period? We're going to talk about the various different ways to secure your loan payment. The other thing is the risk of the country. What countries are you exporting to? Because that does make a difference. On the slide, we put pandemic impact to foreign customers. You're not just worrying about how the pandemic has impacted your company, but how has it impacted your vendors? How does it impact your customers? One of the main issues that my customers are going through right now, whether not just internationally, but is getting supplies, getting equipment, the turnaround on payment. A number of my manufacturers still won't let me visit them because heaven forbid that that someone will bring COVID in and make a line go down. They're behind already. Customers that have turned their product in 30 days are now looking at turning it in 45 or 60 days because they can't get the materials they need to do in a timely fashion to make the product. So the bank is going to ask you a whole list of questions. As I said, a business plan, going back to business plans, is always helpful. And we may ask you to put a number of projections out there. I always laugh when somebody says, do you need 5 years of projections? We're lucky if 1 year projection is, is livable, but we will test those. And we will ask you questions about the assumptions that you made to get to those projections. This is a time, people sometimes are reluctant to give information to the bank. The more that I know about your business, the more that I know about your operating cycle, the better I can help you with. We always, when things aren't going well, sometimes customers are reluctant to talk to their bank. If we're up to date, if we have ongoing information, there's very rarely anything we can't work with. Banks don't like surprises. So this is a time to be completely open about what you're trying to achieve and how the bank can help you. And I'd be happy to answer any questions about that.
Donna asks a lot of questions, but she's nice. And
I am nice.
She's nice, and is doing so with the goal of looking at how to structure in a way that is workable.
I remind people that that commercial bankers are paid to make loans. Sometimes people say the bank doesn't want to lend money. We do want to lend money. We want to help you, but we do not want to put you in a position that will be hurtful later on. So we ask a lot of questions. So be patient with us.
Great. So just briefly on one of the things in terms of doing international business is you're dealing with foreign currency, understanding controlling risk by requiring, like, you get paid in US dollars. And if you don't get paid in US dollars, how do you protect yourself? Just a minute on this. If you get paid in US dollars, you'll have no explicit currency impact, but the fluctuation, if the US dollar strengthens, it's going to cost your customer more. And you want to make sure that your customer, right, doesn't get caught off guard and that your customer is able to pay you in US dollars as agreed upon. If the US dollar weakens, it's going to cost the customer less. Yeah, but you're, so you're still getting paid in US dollars, but maybe the customer benefits. But the first scenario, people say, oh, I'm getting paid in US dollars, nothing to worry about. Well, just make sure that your customer understands that they're going to have to pay in US dollars, and they may want to lock in a forward rate for US dollars so they're not caught off guard. If you get paid in a foreign currency, your customer will have no explicit currency impact. But if the US dollar strengthens, you're going to receive less, and that's not good. If you have loans and you're working into the profitability, right, of making a certain margin, if it weakens, then you'll receive more. If you're getting paid in foreign currency, you should be talking to your banker about the possibility of locking in a forward rate, right? So if you're going to receive, Tom Fox, you're going to receive Canadian dollars in 60 days, you may want to plan to sell the Canadian dollars you receive 60 days from now and lock in your exchange rate for US dollars. So then what your margin's going to be. So that's just a tool. I just flag that it's a layer of risk involved in transactions with foreign and exporting if you're getting paid in either US dollars or foreign currency.
We have been buying in Swedish. We've been buying in US dollars. Yeah. But our contracts in Sweden are in Swedish crowns. Yeah. And my wife is Swedish, so we actually have residence in Sweden, and we're back and forth between countries, and I'm very familiar with this. However, I have not been able to successfully negotiate with this company to get our dollar, our currency value is up 10% since our last contract, and we're not able. They don't want to negotiate with me on the value of our currency. Mm-hmm. So that's I'm still at a breaking point with these guys. But that's up to me though. But I can only suggest for other people that you have in your contracts plus or minus 10% on currency valuation, so that you don't get caught down the road without a clear, decisive point to negotiate.
Work it into your contracts or contract on the currency is what I would say. We are running out of time here. Just in the appendix, we have contact information. Here's myself, Barbara Raths, my colleague, Donna Erler, our bio information, Rich Foy from XM Bank. Thank you so much, Rich. Joe Raycroft from SBA. Thank you so much, Joe. Some additional resources, STEP Funding, Adrian Horn at the Maine International Trade Center, SBDC, who can help you with that plan. And there, Jeff Porter from US Commerce and the Export-Import Bank of Richard Foy again. And that's what we have prepared for you today. Joe, do you want to wrap it up?
Sure. I guess my only final comment would be, I think, on Donna's last slide about all those questions from that lender, that annoying lender. How important it is to have that good relationship with your lender, and put that, work with, again, you can work yourself, you can work with an SBDC on that business plan, but also share that plan with your other trusted advisors, maybe your CPA or even your financial advisor. Get value out of these professional advisors that you work with, and your lender will really appreciate having that, quality document so that they fully understand your business. And I can't, highlight that enough. It's so important. Lenders are busy, and to get piecemeal understanding of a business is very difficult. If you've got a nice PowerPoint presentation or a couple, 3 pages of a business plan, that's a really good start. So I'll leave it with that.
Thanks, Joe.
Thank you, Joe.
Excellent. Thank you all so much for being here. This is the final session of our export week. We had some great presenters here today and all week. Thank you so much for sharing your knowledge and your expertise with the attendees, and thank you to the attendees for being here and making this a good discussion with great questions and everything as well. It really helps improve the knowledge overall for everyone that's here. Thank you to Grace from the Women's Business Center and Peter from the Small Business Development Center for helping me get this put together. Really appreciate it. Thank you so very much. We will follow up with an email with the recordings for all 4 sessions and a link. Pete said he's going to give me a link to that book that was suggested yesterday. Don't Let This Happen to You, I think is the name of that book that was referenced. So either later today or tomorrow morning, we'll get that sent out to everyone who has been attending. Peter.
Yep. No, thanks. I think you said it all. Again, thank you all. We'll also put it on YouTube, so it'll be something that other people can find who didn't know about this event prior to. So YouTube link, links to your email. The email will probably be coming from Brad, by the way. And we'll also have some resources, hopefully.
Thank you.
Thanks, everyone.
Thanks for having me. Thanks.
Have a
Thank
good day.
Thank you.